Don't have $25,000 to trade with? So what do? Does that mean your hopes and dreams of becoming a day trader are ruined, ravished, and destroyed? Not exactly. We're going to talk about the 5 ways that you can get around the pattern day trading rule today. Stick around. I get emails about this topic all the time. Hey Jared, I want to be a trader, but I don't have $25,000 to trade with. Well, for those of you out there who don't know, there's something called the PDT rule, or the pattern day trading rule. And the SEC and FINRA, in their infinite wisdom, have deemed that to be a day trader, which means to be able to take unlimited number of trades between 9:30 a.m. Eastern and 4 p.m. Eastern. Like unlimited number of trades, you need to have at least $25,000 in your trading account. Well, let's be honest. Not everybody has $25,000 to trade with. So does this mean that, oh my gosh, your hopes and dreams of becoming a trader are shattered?
No, God, please, no, no!
Not exactly. So one of the things you want to consider, guys, is I understand that maybe you don't have $25,000, but the other side of the coin is if you only have $500 or $100 or $200, you're probably not ready to trade just yet. Now, I know there's tons of gurus and gurus out there that will take your money for sure. Hey, if you have $100, I can show you how to turn it into 10,000, 100,000. Give me 32 days. I get it. But if you don't have at least, in my opinion, at least a couple $1,000s, at least $2,000 or $3,000, start saving up till you get there. You want to give yourself a realistic opportunity to succeed in this business, okay? So let's just say you have your couple 2,000 or 3,000, or maybe even 5,000 or 10,000 or 15, but you don't quite have that $25,000. So what do? I'll tell you. There are 5 things that I'm going to list today that you guys can do to get around the pattern day trading rule. The first one is, the number one thing is, trade your cash account. Right? Trade a cash account, and you can get in and out as many times as you want throughout the day. But here is the kicker. You do not have margin, right? You can't get 2-to-1 leverage, 3-to-1, 4-to-1, 10-to-1 leverage. So if you have a $5,000 account and you want to trade Apple, well, Apple's a $400 stock, right? Well, that's kind of challenging to do. You're not going to be able to buy very many shares of Apple. So keep that in mind, because you don't have any leverage, all right? Now, the other thing to consider with a cash account is that you cannot short stocks. To short a stock simply means to make money when the stock goes lower.
Now he's going to short the bonds, which means to bet against. Now fuck off.
All right, you must have a margin account to do that. So there are limitations to a cash account. One, you're not going to get any margin, which means you're going to be limited in how much money you can risk per trade. And 2, you cannot short stocks. So half of the stocks out there that we trade, maybe not half, but 30 or 40% of them aren't going to be available to you, because we like to go short as much as we like to go long. We like to trade anything. Now, that doesn't mean that you can't make a living only going long in the stock market. All right, many people do this. You'll just have to fine-tune your approach to do that. But that's number one. That's cash accounts, okay? And there is no danger of over trading with a cash account as long as it's not a margin account. The number 2 thing that you can do is open up multiple accounts, right? Let's say you have $5,000 or $10,000, okay? Let's say you have $5,000, all right? Well, you can open up 3 different trading accounts that are $1,700 each, okay? And each one of those accounts will allow you to take 3 trades per week, right? That's the limitation. If you are under $25,000, you can only take 3 trades per week. If you go over that, it's considered pattern day trading, and they will lock your account. Okay, so when you look at it that way, opening 3 separate accounts is not such a bad idea, right? Maybe you open a TradeStation account, maybe you open a Fidelity account, maybe you open a Robinhood account or something like that. Okay, so if you do that, then at least it gives you the opportunity to take 9 trades in that 5-day rolling period, which is better than 3 trades, okay? So you could even open 4 accounts. Now, some people will make the argument, well, geez, Jared, I'm taking $5,000 and now I'm making it even worse. It's even less money. But here's the kicker, guys. You want to be honest about it for a second? The truth of the matter is, if you have a small account, you're not that good of a trader yet. Not that you won't be a good trader, you're just not there yet, okay? Which means you shouldn't be risking lots of money anyway. You should only be risking $5 or $10 per trade, perhaps $20 on the high side. When I do my weekly, when will the insanity stop sessions? Those are people with small accounts that risked way too much money. Okay, those are people out there that go to these other gurus and gurus like, oh, I made $92,000 today. I can show you too. And you come in with a $2,000 account, you risk everything, blow it up, and then you're done. Don't do that. So, number 2, open multiple trading accounts with smaller risk levels, which is generally safer because you don't have a big account anyway, which means you're not that good yet. Okay, number 3. You can use an offshore broker or a foreign broker. Now, I'll be honest, I don't recommend this because there are no protections for you. There's no SEC protections. There's no FDIC protections. There's nothing. It's possible, although unlikely, it's possible they take your money and run. And this is another reason, if you choose to go that route, offshore brokers, I would highly recommend not putting very much money in. Let's say you have 5 or 10,000, you put it in there, and you have a really good trade or two, or you have a really good month, and you make 5 or 10 grand. Take your money out, all right? And then keep saving that until you get above $25,000, and then you can go to a US-based legitimate broker. So I don't recommend using foreign or international brokers to skirt around the PDT rule, but it is available to you to do so, and that's why I'm not going to recommend any of those brokers to you, okay? So that's number 3. Use a foreign or international broker, okay? Number 4, you can use a proprietary trading account. A prop trading firm is what they call them. However, there are some drawbacks to this. There are some positives, there's some negatives. The positives are, let me get to the positives first. The positives simply are, you usually only need about $2,000 or $3,000 to open up an account with a prop firm. So right now you're all going, sweet, 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 tell me how do I do it, Jared? What are the names of all the prop firms out there? Not so fast, not so fast, okay? You will need a license. You will need a Series 56 or a Series 57 license, and when you do that, that means you are under the umbrella of FINRA. And when you're under the umbrella of FINRA, there are lots and lots of rules to that. You have to have continuing education. You have to pass the test to initially get your license. After you do the testing, pass it, get your license, then you have compliance. So for example, if you have another job, you have to report that job to FINRA. If you change your other job, you have to report that to FINRA. If you move and change your address, you have to report that to FINRA, or they will fine you $1,500, $2,000 if you don't comply. The other one that's a real kicker is you have to list all of your outside accounts. Yes, even your IRAs and 401k accounts. You have to list them all to the prop firm that you're with, and they can take a look at those accounts anytime they want. They're not allowed to touch them or trade them, but they are allowed to view those accounts. So there are definite restrictions. The other issue with prop firms is you have to give them a percentage of your profits or pay decent sized trade fees, okay? Many platforms nowadays don't have trade fees. So paying trade fees is really not fun anymore, is it? It used to be kind of a necessity, not so much anymore. So there are drawbacks to number 4, which is a prop firm. Okay, if you want to go through all of that, and one more thing I forgot, almost forgot, if you put money into a prop firm, FINRA says they have to lock your money for at least 1 year. So let's say you join a prop firm, get your licensing, do everything you're supposed to do, you deposit $5,000 risk capital in that prop firm, it's stuck there for a year. So 2 months from now, if you say, I don't want to trade anymore, sorry, next year come and get your money. Okay, so prop firm isn't necessarily the greatest avenue, but it is an alternative. Number 5 is just take good patterns, right? Just simply take 3 trades a week, be very efficient in your approach, and take really good patterns, perhaps even swing trade a little bit, okay? You can actually make pretty good money just taking 3 trades a week, guys. I know it's not many. Some of you out there are taking 30 trades in a day, but if you're efficient with your approach and you take 3 trades a week and you do 2 all or nothing and you win 2 out of 3, guys, you're making 3-4 a week. Think about that. That's 10 to 15 R a month. That's not bad. All right, now remember, this is not a get-rich-quick business, and if you are starting with a small account, which means under $25,000, you cannot expect to grow that account overnight. It's going to take you some time. You're going to build up to that level where your risk goes from $10 up to $20, up to $50, up to $100, up to $500, up to $1,000, up to $5,000 risk per trade. But when you're new, you're not going to do that because, as always here at Live Traders, your number one job is always money management, controlling risk. You don't want to be featured on a segment of one of my Wednesday When Will the Insanity Stop lectures. Trust me, you don't, because only losers are featured on that every Wednesday. I know it. It's mean, it's nasty. It's true. It's true. People that get exposed or imposed or put on that list every Wednesday are what? People who have done something really, really foolish, some of which learn and move on, great, some don't, and then they'll never trade ever again. That's why it's called When Will the Insanity Stop?
Are you stupid or something?
Stupid is, stupid does, sir.
So today, guys, we've talked about 5 things, 5 ways that you can get around the pattern day trading rules. Number 1, use a cash account. Number 2, open multiple trading accounts. Number 3, use an international or a foreign broker. Number 4, use a prop firm. Number 5, trade really, really efficiently, very smartly, okay? So I hope you enjoyed this video, guys. If you liked it, please click the like button. As always, come on, man, hit that subscribe button. There is not a better, more informative trading channel out there, period. I've seen some of the other ones. There's some good stuff there, but we go deep. We go hardcore into this stuff, all right? I'm Jared Wesley of Live Traders. I'll see you again next time.